What's going on, guys? Get started in a minute. Just gonna reshare the link, and then we'll be good to go. Cool. All right. Just give me a sound check. I turned up the volume because I know some of you guys were complaining about, I guess, the volume being too low. Or no, actually, there weren't complaints about the volume being too low. Excuse me. People were complaining that there was a buzzing noise, and it might have been that because the volume was low, the gain was low, that anyone tuning in, maybe tuning in with headphones, it was necessary to turn the volume up, I guess, enough for it to be somewhat distorted. Because I actually listened to the prior recordings multiple times on different devices, and I didn't hear any buzzing. So crisp as fuck. Good, because this microphone is actually like, I think it's like the best mic you could get. So I know it's not the mic. I thought maybe there was like some wires crossed, or I don't know, because I don't know what I'm talking about when it comes to audio, video, or really anything tech related. Anyhow, we'll get started in a minute. How you guys feeling? You guys bullish, bearish, neutral, indifferent? What are we thinking? Liam, Low Hash, what's up? Cornholio, Emram, Stefano, David, what's up, buddy? Nas, ha ha ha. Bacon, nice. We like the bacon. SM7B, yeah. It's a really buttery mic. I went through a few mics, so cool. All right. How many people we have in here? Let me give it a second more just to let people hop on. Okay, you know, we're just gonna go through the get the formalities aside. As a reminder, none of what I say is financial advice. Strictly for entertainment purposes. I don't even know what a purpose is. Purposes only. Yeah, it's Sunday evening. It's 7 p.m. New York time. I think we're gonna keep rolling with these. Like, you know, I'm sure a lot of you guys have tuned into my other streams. Like, you know how I make a plan and then I can't stick to it. And a lot of the times, you know, I don't enjoy streaming during the hours that I'll set streams. And I know that is absolutely ridiculous. But I would set streams during my trading session, which is, you know, I don't know, like during the session, I'm a little bit hyped up, and then sitting down for a stream, it messes with honestly, it just messes up my entire flow. And then I'm doing gym and jujitsu throughout the day. So, you know, hopping on a stream is actually something that it saps your energy to some degree. Like if you guys ever been on like a voice call or a Zoom, or like there is something about it, you know, this especially where you're just talking nonstop, that drains you, right? Lo and behold, just nonstop talking uses energy. But the Sunday night streams, I actually enjoy them. Like I'm done with my day. It's not like you know, it's not like I am spending time on this rather than, you know, spending time with the family, because at this point everyone's kind of, you know, my daughter's tucked in, my wife is, you know, doing her thing. So we're gonna keep this going, and the benefit of this is it's basically you know, the weekly open, and we could set our plans for the week. Although setting plans in the market is something that, you know, can be a fool's errand, but we're at least setting plans with a level of certainty, right? You could still plan, but yeah, we're gonna stick with these. And shout out to SYNQUOTE. So you guys know this is not a sponsor, this is a partner. And this is not a partner like me sharing a ref link. I'm on the core SYNQUOTE team. So SYNQUOTE is the #1 options dex right now. So we're not exactly publishing our numbers yet. We don't think that it's really necessary to, I guess, shit on everybody else. But we're doing more volume than any other dex right now. And we are the premier dex for options. It is more than RFQ now, so request for quote. We have limit orders, which are very useful, especially if you're trading options. And there's a lot more coming that I cannot get into, but I am on the SYNQUOTE team. So if you use a platform, give me some feedback. Ahmed is phenomenal, and we're doing everything we can to make this the number one options DEX. And I won't go into further details, but there's a lot more coming in the next 2 months. So a couple things I want to talk about during this stream. We got a bunch of people in the chat. I'm going to look back at the chat after a few minutes pass. Just want to touch on a few points that I want to get into. If you see any platforms that I cover during the stream, there's a couple, just as a heads up, there are a few exchange links still below that they still offer bonuses. So if you're looking for exchanges to trade on, there's some in the description. There should be links to some of the platforms that I use. I have to add more links. I always forget that you have to update the template. I gotta have my YouTube guys on this because I do have 3 brothers that are doing everything on my YouTube. But there's a couple other links I want to add below. There's Coin Market Man discounts that I could get you guys. I'm gonna try to make sure that I have as many things that you could take advantage of as possible. Not just links to shill links, but I want you guys to get discounts. I want you guys to get access to these platforms without breaking the bank. All right, so yeah, we're gonna talk about a few things. We'll talk about BTC. We'll talk about ETH. We'll talk about alts. Obviously, derivatives they're hot, but then it's not really. Derivatives are getting hot, right? Because there's a ton of demand, but it's not like prior rallies during the bear market where the first sign of overheating meant that things were, where the first sign of overheating was the canary in the coal mine. I don't want to say that though, and leave anyone with the impression that I think that the market isn't starting to get. It is hot to the point now where I've reduced a lot of my risk, but it is. From the looks of it right now, it is sustainable still. Although I would say that what is sustainable is the rotations that are taking place, sector to sector. In this case, L1 to L1. It seems like there's a little bit more tailwinds to keep this thing going, rather than those rotations. If anything, during the bear market, like prior rallies when things were overheated, rotations also sped up too. So we're seeing that there's a lot of sideline capital that's come back. There's another point that I want to get into. Some new retail coming in. This is anecdotal, but I think it's worth mentioning. So I'll talk about that. Not too much to go into with that. I mean, it's like I said, it's an anecdotal story. Might as well just cover it real quick. Some people that know that I'm a trader, that know that I am heavily involved in this market primarily, they are starting to seek me out. And we're talking hey, like friends of my wife, their husbands, right? The woman who designed my house, her husband, hey, I want to reach out to you. I told my husband that you're involved in crypto, and he's, he messaged me today, right? So this is something worth keeping in mind. People are talking about retail coming back as though, one, that they're not retail, right? And two, as if the retail that came in at the top last time don't deserve a little bit of credit. So I think that the retail that came in at the top last time, they deserve some credit, right? Because they bought the top, they bought close to the top, they had their trial by fire, and they don't get put in sort of the same bucket as someone who is really fresh to this market. Maybe they dabbled a little bit, but I think they deserve some credit, right? The same way as if you came in at the top of 2017, 2018, if you came in towards the tail end of that, you saw the end of that, and then you had your next cycle, but it's not the same as you had a little bit more experience, right? It's obviously the best way to put it. So I'm not considering just people coming back that came in last time. I'm looking for some level of distinguishment between someone who came in last time, got wrecked, and someone who is, just starting to become interested in markets as a whole. And it's not like, listen, traditional markets are widely accessible, so it's not like crypto's under a rock anymore. It's not like you really have to seek this market out like you used to going back prior cycles. But anyway, so that's notable. Again, anecdotal. So plural of anecdote is not data, but keep that in mind. When you start having a bunch of new people coming in and asking you, about Doge and old things, right, from last cycle that pumped, that's probably a decent point. Rather, excuse me, I'm trying to burp, but I'm not trying to burp on the mic. That's at least maybe something to heed in terms of removing some risk, or just being cautious. You know what they say: whenever your taxi driver and your shoe shiner start talking about trading. And obviously, I don't think many people are getting their shoes shined anymore. Although if you go throughout the city, if you go through like Penn Station, there are guys still shining shoes for the commuters. But pretty much anytime that you have people that are not involved in markets that are suddenly very interested in markets because they just bought their first, 10% return. They just got their first 10% return. You gotta your sirens should start blaring to some degree. So that's something I covered that. As far as like prior cycles to this cycle, there's a lot of obviously reflection on prior cycles. It's not going to be a carbon copy, all right? If this is a cycle moving forward that we're getting into, it's the beginning, and it's arguably going to be the most different, because this would be the first cycle where there's actual, real large institutional involvement. If there's an ETF, if we're saying that the ETF is going to begin the next cycle, right? ETFs being green lit on January 10th, if all things go well. If we're talking about a cycle where those are available, then we're talking about a cycle where there's going to be pension flows, hopefully, right? Sovereign wealth funds getting more involved, retirement funds, Bitcoin packaged with, your standard financial advisors, sort of basic, introductory portfolio for moms and pops and whatnot. Very small allocation, but it's just going to have different flows. So that's going to be something worth keeping in mind. All right, and then the last thing I'm going to go over. Sorry for this sort of long-winded intro. The last thing I'm going to go over is, the market is it's not really welcoming in terms of allowing you to enter. I mean, in a textbook, right? If you are someone who's like, I just picked up trading, and I recommend a TA book, at least if you're going to take, very academic approach to trading. And I think you should, not just reading books, but I mean, pick up some literature. There's some great trading books, some great trading stories. You're going to learn from other people's experiences. In terms of technicals, pretty simple, but you pick up a TA book like a technical analysis of the financial markets by Murphy. What is a trend? Something that moves like this, right? So you want to get involved in pullbacks. You want to sell, right? You want to sell when the market begins to change trend, put in a series of lower highs and lower lows. You get sort of this, sort of imprinted on you, right? Where you're suddenly just looking for the trend in reality to fit what you've seen or what you have learned the trend to look like when you're thinking of it from a textbook standpoint, right? When you're thinking of it just objectively, as a series of higher highs and higher lows, and there being sort of a welcome period where you can get involved, easy entries, it's going to be obvious. That's not the case, right? The reality of a really strong trend is, when things really change, part of something really changing implies that something has really changed, right? As sort of tautological as that sounds, what I mean is that for the first time, you have really significant demand compared to prior periods where that demand was absent. So what does really significant demand look like? It looks like days and weeks of one-sided moves where there's no real pullback, right? If you're looking at a daily chart, you're looking at a weekly chart. By the time you get a pullback on the weekly chart, by the time you get it on the daily chart, a lot of times, like at that point, you might be able to buy the next dip or the next dip after that, meaning the market's going to either start moving sideways, consolidating, bracketing, however you want to put it. But if you're starting to get a constructive pullback on the weekly, like that implies that something is slowing down on that time frame, and getting involved the first time around might be a decent area to buy, right? But you might be waiting a while for it to actually leave that station. Whereas if you're involved in a fast moving trend, you're going to need to zoom in a little bit. You're going to need something to get you involved sooner rather than waiting for that, textbook pullback to occur, because it's not occurring on the high time frames. You're getting it intraday, and there are some things I think that are valuable that I've used, or I should say that I use. And in particular, after we have consolidations and we have breakouts and we're in a strong trend like we are, a method of getting involved in those breakouts that incorporates daily closes and then incorporates a lower time frame entry. So I should do more things like this on my streams, where I go into, at least during every stream, I have something, where I get into sort of either an entry method, an exit method, or some kind of technical to consider, and that you guys can take from each stream, rather than just kind of fucking shooting the shit and talking about, what we're looking at for the week. All right. So as far as like, just a heads up, I know this has been sort of off everybody's radar, for a while now, because it hasn't mattered. Right. But this is the FOMC, meeting and rate, this Wednesday, right? So this Wednesday on the 13th, we have the next rate decision. And I'd say this is kind of important, right? Because you have a lot of people, traditional markets moving up for a long time now, pricing in cuts, pricing in everything sort of coming off on that end. And this is a chance for the market to get caught offside, traditional markets, right? And I think this could potentially spill over to crypto, if there is a raise rather than keeping things steady or a cut. Short Jito, I didn't short Jito. So this is something just worth paying attention to, all right? Because it could come out of left field. If we do have a hike, this is something that I don't think the market is anticipating. Forecast is that things remain the same. So this is on Wednesday. This is at 2 p.m. and then obviously the press conference always at 2:30. This hasn't mattered much, right? But it only doesn't matter much until it matters again. And I think moving forward, this market is likely to remain more correlated than not to traditional markets. Obviously, we have periods where we're really outperforming, but everything really is outperforming as well. It's easy to forget that, while BTC is outperforming right now, if we look at the ES, if we look at the NASDAQ, they are racing towards highs as well. Okay, so there's really no difference there. As far as BTC goes, a couple things worth paying attention to. And I mentioned this during the last stream. I mentioned this a bunch on Twitter. Obviously, I haven't streamed as much, but you could see that I'm going to pull these out, and you're going to see that I've been using different tools now that we're in a really strong trend. So I went over this last stream. If anyone has any questions about what I'm looking at right now, really quickly, I've always used a 20-period moving average when we're trending. So I use a combination of a 20-period, a 50, a 10. I look at anchored VWAPs. So in this case, we have the monthly VWAP on. We have the yearly VWAP as well. And I'm looking at higher time frame position tools rather than focusing on day trading, because the markets have been really strong. You want to get really good at being able to change when the market changes. And if you're still trading like intraday rotations, yeah, you could still pull a lot out of the market. But this is a time where you want to be able to put on some meatier moves. And when this market trends, it's a really strong trend. It's a market that trends really hard and has a ton of momentum. So it pays to be able to hit it from multiple angles. So in case anyone's wondering, what you're looking at, I think I've covered this many times. But as far as I'm concerned, right, the CME, while I don't think it's necessarily smart money, it's fast money, but the fast money is hedge funds, right? Hedge funds aren't necessarily smarter than retail. We've seen many times before where their decisions are not necessarily a step ahead of retail. And if anything, in this market, it's been obvious many times before that retail has outdone the institutional types. But if we look at the CME, the CME has been really strong for quite some time now, outpacing Binance or outdoing Binance from an open interest standpoint. And that's meaningful because the CME has higher margin requirements. So there's more capital at play versus an exchange that has, lower margin requirements and offers more leverage. But we're going into the last month of the year. We're going into the next month, which is decision month. I would pay attention to how this positioning behaves into the end of the month. And I'd start to say, it's going to be more important now than ever because there's not a lot going on at the end of this month because it's a holiday and it's the end of the year. So you have window dressing that's put on. You have, not a whole lot of activity that takes place at the end of the year. And I think it's unlikely that a lot of the CME positioning rolls through to January. The term structure, so each contract is steep, so it costs you because you have to sell low and buy higher. And it doesn't make sense to me that the fast money types are going to hold through a catalyst. I think it makes sense to assume that buy the rumor, sell the news occurs. So, one thing to pay attention to is that the CME premium so far has been coming off slightly. So if you look at the CME premium, what I'm talking about is I look at the difference between Coinbase and the CME, right? So if this is a high time frame chart, but you could see that overall we've kind of slowly declined over the last month. And this is just showing you the difference in prices, right? So as the front of this is always going to be somewhat skewed because you're going to have roll and buying higher. But this has shown that I think you're starting to see some positioning coming off, right, in this contract. And I don't personally think, it's going to be a complete mistake, but I don't think you're going to see this roll. So if all these positions are closed out, or if this is not held through to January or rolled through, I don't think that we're going to see that the crypto market does much different. Other things you're looking at right here is the Coinbase Bybit premium and the Coinbase Binance premium. It's gotten noticeably hot as we've put in this sort of more recent leg and moved towards 45. So again, things are overheating on alt's side. BTC from a premium standpoint finally getting hot. So I don't want to say it's overheated because the spot market still has been supportive. Everyone's pointing out that there is sort of this Binance Chad that's been supporting price on the way up. We've had a strong bid presence throughout this entire move, and that level has been defended. It's right here pretty much. So we're looking at 648 BTC, to the tune of 1,000 BTC. So a very significant amount of money, but bid ask is still skewed ask side now. So, do you want to lean on just this person being able to carry the entire market up? There are some things worth keeping in mind with BTC other than it is kind of going vertical at this point. So, if we keep this on, say, if you turn off log, you start to get the fear chart. If you look at this on the weekly, this is the CME contract. We look at Coinbase, we look at Tether, same thing. This 45, 44 region, very sticky region, okay? Very sticky region. I don't think we're going to see this give up without a fight. And if we see CME come off, I don't think that crypto does it on its own. So crypto exchange activity does it on its own. I think the markets right now are moving in tandem. If we look at sort of what has changed more recently for BTC between exchanges, Coinbase noticeably being very aggressive this entire time. Obviously, probably a significant amount of that was Sailor. So if we just isolate Coinbase CVD throughout the duration of this move up, pretty one-sided. Starting to see that begin to shift up here. Okay, so as price moving sideways, Coinbase looks like it's distributing somewhat. Still worth pointing out though that price is holding this level though. So price is relatively flat. CVDs are down. So there is bid support there, right? There is a decent amount of bid support. That is worth noting. Looks like though, if we look at, and this is something that I was able to isolate for before, if we look at Bitfinex, which is home of the whales, so anyone who's been following a long time or anyone who's been on CT a long time know that I've mentioned this. Plenty of people have talked about Bitfinex being sort of home of the whales. As soon as we put in this move up, there was quite a significant drop on that exchange. If we just isolate just for Bitfinex and give you an idea of USD value, we're talking about 400 mil coming off. So roughly 400 mil worth of BTC coming off. Again, price sideways. And then if we look at ETH from that same date, sort of like the opposite has happened. So we isolate for ETH, Bitfinex. And I think this is worth segueing into ETH right after this because of this. Zoom out. Here we go. So you have basically, so right here to here. So from here to here, right? So we have a price increase with ETH. So it's not like this USD increase is all from just positioning added, but you have roughly up to this point right now, 300 mil. If we just isolate this for ETH though, you have a lot of ETH tagged on. A lot of BTC sold, a lot of ETH tagged on. I think that this is noteworthy. I think it's worth keeping in mind, right, how long Bitcoin has been trending, that it is likely to take some time, right, at least moving sideways. And we are going into a catalyst. And from the beginning, I've said in this catalyst that into the catalyst, we probably get a spike. And then we have, I think we're going to have a correction. And then between the approval and listing, a lot can happen. But yeah, so BTC, to wrap it up, we have pretty obvious support that's been there the entire time. I don't know if we want to lean on this entirely. Starting to see some behavior on Coinbase, some behavior on Bitfinex that's worth noting. If you look at the options market, I mean, they've just been reaching up the entire time. This is starting to show signs of some flipping in terms of the bid-ask skewing, more favorably to the ask side than the bid side. So there is less stickiness now and on the way down. So one thing worth keeping in mind, like if you're trying to get filled and you're a large, if you're trying to get filled for a large position and you keep having to chase price up and you're not getting filled, and there hasn't been many interruptions in this trend, right? If we're looking at this on the hourly, there hasn't been many interruptions. I mean, this has been, this started accelerating over here, but even back here, I mean, you had some strong moves down, but then each one sort of left behind, and this sets up, a ton of liquidity below, likely things that would be stop orders and the likes. But as the market moves up and, bids don't get filled, okay, what happens a lot of times, you'll have those bids come in at market and start to chase. And so when you have bids removed and then them added up here, and we're sort of, multiple standard deviations away from VWAP now with a bunch of volume coming in up here, you're removing liquidity below, and it makes it easier for when we do finally have a correction, it to cut through like butter, right? Like a hot knife through butter. So, I mean, the entire time we've seen bid support though, so there is a ton of demand. But just, keep in mind sort of where we are and what we're approaching, right? More importantly, we're going into the second week we're in the second week of December, and we're a month away exactly from what is supposed to be the ETF decision. So it brings us right to ETH, because I think this is worth talking about given what we've seen across exchanges and in particular on Bitfinex. So I think this is really simple, honestly. So if we look at this on the monthly, the weekly, I don't want to make it overly complex. I don't think there's really a need to. Monthly, weekly, just kind of identifying where that key resistance was and that supply zone was, and we're going all the way back to 2022. Even tapping into sort of the top side of that structure, if we even extend this all the way back here, it's a very obvious level that the market has been contending with. It took longer to break out than BTC, right? Sort of same level would be this 3230 level. ETH, weaker than BTC this year, okay, dragging behind most of the attention on Solana right now, leaving this, I think, neglected and doubted. And you have the beginning, I mean, this is the first really significant close through this level. When the same thing happened with BTC, it took a while, but it led to a very strong follow through. Now, keep in mind, it's a weekly chart, so give it what is required in terms of weekly patience, right? I think that myself personally, when I talked about, I posted on Twitter that I was de-risking because of my own euphoria, but I was still adding ETH spot and I was staying in BTC spot. So I added to this because I think that in hindsight, this is going to be really obvious to a lot of people that are sort of either doubting everything right now in terms of where all rotations are, doubting ETH specifically, whether it's from an existential standpoint or just from a performance standpoint relative to other L1s, as if this is going to be threatened by other L1s in the near future. So I think this is going to be really clear that this is an obvious area to buy because of this major contextual shift. If you look at ETH BTC, this 0.05 level, let's just put it this way. I know someone who's very popular that is keeping this level defended. Okay. I don't think that we see 0.5 go. Knowing that they're there and they're playing the long game, and you look at that Bitfinex activity, I think that we're going to see a shift. I think it's most obvious that this would happen. Not most obvious. I mean, I think that it makes sense for this to happen post ETF announcement, right? BTC ETF, right? And then next year we'll be talking about the inevitable ETH ETF. So for this, just from a high time frame standpoint, I'm not messing with much. Any dips back down to this 2150 level, I think are worth buying. I think it's also worth, it's worth noting that you have to be patient with moves like this because this is a big contextual shift. Anyone who's sold for the last year and a half, clearly sold too early. This is very clearly a bottoming structure. And I think this will take time, but I think everyone's going to be caught off guard because I think a lot of people are focused on everybody else besides ETH right now, right? As rotations take place. And no, it's actually not Kobe who I'm talking about. Let's see. So I don't want to get into low time frame stuff. I don't know if you guys know from the last few streams or recognize, but I'm not really looking at anything that's below, 4-hour chart. Okay. This is the time to not get shaken out of really good positions, and to give price sort of the respect that it deserves. And understanding the kind of trends that crypto has, which means they're noisy. They deserve some breathing room. A combination of moving averages and volatility stops will be very useful. So using a volatility stop, whether it's a multiple of ATR, whether it's, you're using some kind of basis off of VWAP or a TWAP or a moving average. Anyhow, so ETH, I think, is going to do what, if anyone put a little bit of brain power towards it, I think they would remember that this has happened a few times where ETH has lagged. And then taken a while because we're talking about a high time frame move. The problem that everyone is, I think, falling victim to right now, where they're getting shaken out of positions, is that they're forgetting that for each time frame that you go up, you have to give price that much more time to do everything you would require on a low time frame breakout for a low time frame move. Okay, but so it just scales up. Again, big ships turn slowly. It's something that I've said many times, and it applies to high time frames. Okay, so what else did I want to get into? So let's take a look at just alts across the board, because we just had our weekly close. Pepe finally had a breakout. AAVE, this is something that, keeping in mind, I don't think that DeFi is dead. I think when we see ETH strength, we're going to see a lot of life come back to ETH DeFi. So AAVE, I think, is worth something. Is worth paying attention to. Right now with AAVE, you have this sort of 90 to 100 level, looking like we have it acting as support now, but potential flip. So it might be a little bit loose over here. The way it is, it's not exactly jumping out of the stall, but if we start to see ETH really continue upward with strength, I would imagine we would see these come back to life, and or this specifically this being a good example of something that would be a good long at this point with this flip. And looking at this on the daily chart, all right, still holding that 20 period. It's just low time frame wise, intra-week, it's chopping around. But we broke out of that yearly VWAP range. If we look at weekly VWAP, market's just ranging. You have a bunch of overlap. Let's see. Now, for the sake of the stream and not kind of junking everything up, I have this open. But usually the last couple weeks, just to look at the high time frame and get a quick view without having to really do a whole lot of work, right? Just scanning everything. I'm looking at the weekly, daily, and 4 hour and just ripping through everything, seeing kind of where we're sitting. AVAX, obviously, very strong. Atom, let's see. It's a little bit of a lag now. I don't know what's going on. Why is this taking a second? It's going to piss me off. LDO. So what do we have happen there? Was that an old? That might have been an old one because I don't see that right there. Let's take a look at AVAX real quick. Or was I on? I was on Atom. Yeah, so we have these flips within prior market structure that, although we're still within a range, so Atom is a good example. You know, although we're still within a range, right, being this high time frame range, more notably just this transition taking place, right, where you have this sort of support and resistance flip locally. So I think, you know, things like this, if they're showing strength above mid-range, and we're looking all the way back to, you know, 2022, these are the kind of things that I think, you know, you give breathing room, because you are seeing this, the same thing. Everything is being more or less telegraphed, right? If the pair isn't completely dead and there's activity on the chain even somewhat, markets are rotating now, and, you know, we're seeing sort of the catch-up play. Obviously Solana, one of the first to get most of the attention, but now that's shifting to AVAX and, you know, Sol Luna AVAX, but obviously Luna is completely dead. But major changes in market structure, you have to give them the respect they deserve in terms of the amount of time that they deserve to consolidate and continue, right? So you had 2 weeks, 3 weeks in the making for this SR flip. So looking for, on the high time frame, more of that specifically. So Bitcoin Cash, it's always a matter of time, I think, until this pumps. This is making a series of higher lows. I think you're going to see that this grinds and then pops. Big time. This is interesting. This is something that I think Hasako is shilling, or has Hasaka shill potential, as silly as that sounds. I mean, this is over 50% off the highs now, or this is roughly. And like I said a couple streams ago, anything that's put in a really strong move, I'm looking at the 60 level on RSI to first start getting involved, right? To start looking for any kind of constructive price action and continuation. But again, sort of in keeping with my plans for this cycle is new coins, AI, and obviously what has been strong from the beginning. Bonk ripping. See, all of these SR flips, even in things that are not really that relevant anymore. I'm not speaking specifically about Chronos, or, you know, in case I'm just talking kind of out loud and I'm on a chart and I'm not talking about that chart. All of these are at least offering brief continuation plays off the level. It's just a matter of how long it takes the market to get around to that. I&J is one that I think is ripe for continuation. And it's probably worth segueing into the entry method that I was talking about, wild as well. So I don't know if you guys can tell. This stream is basically me. I'm just ripping through charts to make mental notes of what I'm going to go back through and mark up for this week. Now things like this, new coins, completely retaking their opening levels. I mean, aside from this sort of exhaustive print, you know, any new coin that has done this, right? Put in this side of correction, longer consolidation, and then trade it over its highest close going back to inception. All that does is say that anyone who sold was wrong. You see this a lot with airdrops, right? You have an airdrop or new coin dropped, and then new coin listed. People who are early sell, ends up correcting, and then a real chase begins as it starts retrading above this, you know, the opening highest close, because maybe no one anticipated that this would remain strong. So this took its time. Obviously, this is new. This is AI related. I'm bullish on WorldCoin into this cycle. All right, so let me get into, I think, something that I think is useful. We've seen it work on AVAX, on Solana, and it's useful for times like this where, again, you're not getting, you know, there's some pairs you're getting decent pullbacks, you know, maybe back-to-back 2-day pullbacks. But even then, you could start in a really strong trend. You might have criteria set up like that where you have 2 red days you're buying. It's just you're not getting, you know, a lot of times, especially in breakouts, you're not getting major returns to the level. So, for example, like, well, here, let's just quickly go over the idea. So, in the case of, let's say we have a really significant level that we've, you know, identified, daily close, weekly close, level that's been defended for quite some time. And you're wondering how to get involved in this. And, you know, a lot of times people use high time frame closes. So let's say we have a daily candle close. Let me see if I can actually, you know what we'll do? We'll square it up. So we have a level. Where's my drawing tool? Give me one sec, because I have my other drawing tool, which I'll open up. You know, it's been frozen. We'll stick with this. So we have a level, right, that we've identified, you know, very significant level, especially coming off of, you know, moves like Solana, AVAX, the really strong moves that we've seen that have been correcting sideways now for some time, and have been either grinding up or holding a level and establishing value within a range. Breakouts like this are often worth buying. Okay. Now, if you are looking at a structure on the daily or weekly and you get a daily close through it, you know, a lot of people talk about support and resistance zones. So in this case, you know, this being a resistance zone, and you're looking to buy sort of the pullback to this level for the best risk reward, right? The best defined trade. Okay. But the truth is you're not getting often pullbacks, right? You're getting just continuation for days through the level, right? You have a daily close, you know, whether it's, you know, it's marginally high or we have a complete smoking of the level. And then you're thinking, I'm going to set bids back here. And that often it's not the case that you're going to see that filled in a really strong trend. The idea of a really strong trend is that you're just like locked out. Okay. You know, you're not really given an opportunity to buy because everybody wants to buy and everybody's front running everybody. And you're not going to have any chance to get involved. So one of the things that I would suggest you do is, and this is, you know, part of trading intraday and part of trading continuation moves, and even if you're just low time from trading and day trading, looking at the daily open or prior day's close reclaims are often a pretty good signal or threshold to define positions or to at least get behind in terms of continuation play. So rather than, so here's an example. So we'll use just AVAX. Okay, so here is your daily close. Market consolidates for a couple of weeks. In this case, literally a couple of weeks. Finally have a close through that level. Okay, so we'll just mark that. That is your close. We'll zoom in even more. For AVAX, this is going to be a ridiculous example, okay? But to exaggerate the example, if we have a key level and then we have a daily close through it, okay? And here's the close. Oftentimes, so this being the close, this being the close, this white line, oftentimes a move above, a loss of that, and a reclaim is good enough for a trigger. So what this is essentially putting in the low of the day, okay? And in really strong trends, what you're going to see is that the low of the day is put in early in the day, okay? So it should be clear why that is obvious, all right? So a simple loss of this and reclaim is often good enough for a trigger. Now, one thing you have to keep in mind is the reaction at the prior day's high, okay? So if we have the close through the level, here's the prior day's high. If you have instead a swiping of that prior day's high and then a loss of that level, then you might be looking at a potential reversal or a false breakout. But it's the daily close, okay, the loss and the reclaim that is often a pretty good signal. If we go to like Solana, I think it's a more exaggerated example. I mean, you could go across a board, and this has been a good entry method for almost everything that's been trending really hard. So you could either use, it's either a matter of the daily close, prior daily close, loss reclaim, or taking out the daily high and then and having no reversal. So what I said before for a reversal would be if we had, here's your prior day's close, high, all right, move through, take that prior day's high, and then we're falling back below the close and there's really no bid in that level. And this would be where you'd be looking at order flow and sort of keeping more eye on what's taking place lower time frame. But the opposite case would be, because again, in a really strong trend, you're not going to get, sometimes you're not going to get any offer, or excuse me, any chance to buy even after the close where you have a pullback, right? One thing you have to keep in mind is when you have these higher time frame closes, you have basic algos that are executing off of this. So anything that's really strong, like let's say that this is, the market, for example, we had this key close through the level. This is a breakout close at this point. As soon as that happens, you're going to be triggering systems to get long. All right. And at that point, it's very easy for this to overwhelm any of the other side, right? Any selling pressure. Right. And again, not really allow you to have any kind of entry. So it might not be the case where, let's say you even have something where, we move up, we lose this and we reclaim. It might just be that you do have the response at the prior day's high, right? So we open, okay, we are continuing through prior day's high, which is right here. And then this is just remaining bid right away. So you might have lower time frame wise a series of, you might have a series of higher lows that are beginning to shape up, and this close is holding. And then what if you look at the strong trends, it's one strong candle after the next, right? Where you're just completely locked out. So for example, I might as well just do it with this. So Solana, so just isolating, here's that closes up here, and it's complete lockout. Okay, so here's a good example. So this is exactly actually what I just drew. So that is perfect because you have prior day's high right here. Okay, here's the close. So this is the close through the consolidation, right? So a breakout or a breakout worthy close. Okay, market is grinding up right away, right? Not losing that close, not retracing below and giving you that re-entry there. Instead, completely bid right away off the open. So just a really strong opening drive. And then we end up taking out that high. And then immediately we are still tracking, bid is tracking upward. So still respecting. And at this point, you're establishing support through that prior day's high. So you're not getting the pullback. And this is a time when it's actually a time when it's worth paying attention on that low time frame, monitoring this after these closes. And one thing that I would say is, one thing that is probably going to do the exact same thing because they're all doing it. If we look at, so INJ is a really good example of a chart that should be on your watch list right now. One sec, hold on, just because I have this on the left. So this is just Velo. So, if you want an easy way to identify sort of what's moving. So we have this tool from one of the groups that I'm in. This is a custom tool, and you could plot from BTC's bottom, whether it's, the daily bottom, the weekly bottom, the monthly. That's a private tool, but this Velo, you could very easily go through gainers, losers, break it down by time frame, see where sort of the money is flowing. But INJ, right, Injective, really strong this entire year. Okay, basically right off the open, you put a VWAP on this. I mean, we're probably well extended now. Yeah, so yearly VWAP is all the way down there. But we are right now putting in, so I got to put the log chart on this. Right now we are looking at, so the highest close right here, all-time high close. Okay, and this is where we're sitting. So needless to say, here something worth pointing out. Just thinking in terms of probability, what do you think the probability of this reversing here is? Extremely low, right? So it might not be the best way to define a position because there might not be a good area for you to define a position of an inevitable taking of this level, but I'd say there's a 99% chance that this moves up above 22.28. So, I mean, if you had enough margin to swing along, you could probably hold on to a deep ass pullback and get those points. Do I think it's a good idea? No, but it's sort of an inevitable level that's going to go. This is a really strong trend. I mean, if you look at this, we finally had a breakout of this, multi-week consolidation. This is over a month long. Consolidations like this that break up, okay, you don't fade it, right? You don't fade long consolidation breaks, okay? You might get sort of an exhaustive stop run or a blowout from some shorts being blown out, but the market right now is not such that moves are being created by short squeezes alone. There's just a ton of buying that's coming in across the board. So things like this are working for continuation. So what I would say though is all-time high breaks are always good trades after a very long period of time has passed. So it might take some time, but again, you're sending just a very clear message that anyone who ever sold this is wrong. Okay. So anything like this at the beginning of a market cycle, right? Allegedly, is probably going to put in a very significant move above this high. I would say honestly, you might even get like a 1-for-1 move of this. Like that's pretty ridiculous, but I know at least a double. Excuse me, not 1-for-1. The break of this high. I think you're at least going to get an overextension here that sends us up to 40. But nevertheless, to stay on topic. So this is your highest daily close. What I'm saying is the move through this, right? We might get a really explosive move through this level, right? So maybe they were putting in the daily low right now, probably. So this is the open. So good practice right now. This is the daily open. You probably honestly have a short-term trade, so low time frame trade right here set up. So open, all right. If you looked at VWAP for the day, probably holding below VWAP. If you looked at a profile for the day, POC moving down. And then if we're back above that open, I think you could honestly target the all-time high close. But in keeping with that low time frame setup through that level, basically same thing. Let's say we had exactly what I just said for this brief setup through this level. That's your close. Imagine that we get a close like that. Maybe you have a little wick above there. This is your close. The entry to this move that probably explodes through further is probably something like this. Below the close or below the open again, and then reclaims. Right? And then, like I said, with Solana, which was a good example, if in this case we take out this high and then we're sort of grinding between the high and the close, and you have something that is possibly upward sloping, you don't want to fade drift. So if we have something that's sloping up within this level, just looking at methods of getting behind this move, unless you just want to literally buy this, right? But yeah. Fetch. Something that I think is worth pointing out, as far as just a bigger picture view, the market has been strong enough, and we haven't seen that, we haven't really seen that these moves yet are becoming the exhaustive short squeeze blowouts that lead to reversals. So while longs are getting hot, it's not the case that there's a bunch of betting against the trend yet. So what we need to have is like a pullback across the board that gets people betting against the trend hard. Like, oh, it's over. That was it. That was an echo, echo bubble, whatever. And then you have bigger moves up still because people are shorting at that point heavy and completely offside. But until I would say confidently that considering the strength that we're seeing across the board and how we're seeing money shifted now from BTC to ETH, reasonably so, and again, sort of how these moves are being sustained, I don't think it's over yet until you have blow-offs across the board. So until you have, very large spikes and reversals and ugly candles on the chart. So I think the reason why I'm mentioning this is because Fetch is a good example. Fetch AI pair, I think AI pairs are going to benefit heavily over the coming cycle. This is it. This is not the reversal, clearly. So, is this the area to buy necessarily? If you could buy here and hold on, yeah, you'll probably be way better off a couple months from now. But if it looks like this after the strength we've seen across the board, it's not done. It's probably going to need to look more like this, honestly, right? You have some kind of nasty snapback. This looks like a nice smooth consolidation pullback right now, grinding against a level. You can see I have an alert on that level. This chart looks like it's going much higher, right? Closer to on the monthly, new high in the weekly. I mean, this thing is just, it's taking its time, but I think Fetch is going to be significantly higher. But, my view, high time frame for everything is that this stuff doesn't end without a bang. Or this activity doesn't end without a bang. Link is a great example. So, and I left it out the other day. I posted my portfolio. I said, just in case, because everyone wants to know my spot portfolio. And I accidentally left Link and Doge out. So, I say that because there was someone who posted literally after that, like, there's this thing on crypto Twitter where everyone wants to say, like, gotcha, everyone wants to get everyone on something because everyone thinks that everyone else is just bullshitting. So I forgot what the response was. Someone put up like bull trappers, never had an issue with him, but I was like, all right, dude, like, he said something about me not listing Link and I said I was long Link, and I'm like, I literally just fucking forgot to list it. Like, it's line item season, meaning I have more pairs at one time over a week ago than I have had in the last 2 years. So it's, I literally fucking forgot about on-chain things. I forgot at one point that I still owned Maple. Like, it is what it is. But yeah, bullish on Link. And because I just mentioned it, Doge, I was saying to buy Doge when it was at 6 cents. I was saying to buy Doge, like, you can look on my Twitter. I was saying that this level wasn't going to go, and this is like basically, it's basically like BTC at this point. Yeah, I mean, as far as Link it goes, this is a great example because this drives home the point that when you have a really long consolidation like this, one, you don't fade the break. because at this point, it's a massive change in market structure. All of the, whether it's unwinding or sidewind capital now being convinced, whatever it is, like if you have a long consolidation, you're going to get a long breakout. So if you have a fucking multi-year long consolidation that has a strong breakout, you just hang on to this. You just let it ride for a long time. We're talking, not price invalidation, but time invalidation. I mean, yeah, you could have price invalidation back in the range, but it's not going back there for a while, right? So this, you just have to say, I'm not going to sell this for at least a month, because it's been, or I could say comfortably, I know that this is probably not even worth looking at for a month. Let me not micromanage this thing. But it's a great example, right? Massive range, huge breakout. You don't get a weekly pullback yet until you're all the way up here. And we're well off the platform at this point. And actually, so this is a good example of a failed breakout right here. So this was a failed breakout by Link. All right, so potential continuation play. This looks like it's, possibly the first real strong move through. Looking at this back here. So this was the close right here. Okay, and then the exact opposite of what I said was for continuation, right? With the strength that we're talking about, the exact opposite happens. Not the exact opposite. One sec. But nevertheless, the market actually puts in a low, reclaims this, but is rejected at the prior day's high. So this is an example of it actually sweeping below. You get that continuation move off of. So you can take these low. Listen, you guys can take these low time frame trades if you want. Like I pointed out with Injective, the low time frame trade that's actually on the table right now. But obviously you want to focus more on larger moves at this point. But you do get the low time frame retest, right? So just to zoom in so everyone knows what I'm talking about. So you get the reclaim of that daily level right here. So here's the wick. Here's the reclaim. And then prior day's high. But now you start to see immediately market nukes lower. And where does it test as resistance? Okay, it tests that close. So it's just the opposite in play, right? Strength by sellers rather than by buyers through that level. So you at least on the low time frame, that battle is relatively clear. But yeah, guys, I think that's going to wrap it up, honestly. Hopefully you guys found that valuable. I scanned through charts during the stream. I'm keeping Injective on the radar. Wild, so just to throw out a few tickers that I'm focused on. Wild, Injective, through that highest close. SNX as well. So just look at SNX, what this has done. So we have sort of a similar situation as Link. Just beginnings of a possible much longer trend. T is struggling, right? So rejected at the highest close so far, right? So this is the beginning of the day. Trend is intact if you look at the 4-hour chart, just from a trend standpoint, looking at moving averages. Let me get rid of the session breaks so you guys can see more clearly. So this bluish gray area right here this is the monthly VWAP and standard deviation band. So we're, it's consolidating. Like really strong trends going to hold that outer band. This is getting rejected pretty cleanly so far. TIO is really hyped up. Had the extension already, so I think this just consolidates more. But yeah, that'll do it, guys. Appreciate everyone tuning in. Be sure to check out SYNQUOTE because we're going to be releasing a lot of things in the near future. Not just shilling it, again, on the core team, part of SYNQUOTE. And yeah, BTC pulling back. And interestingly enough, off the open, actually, there was a divergence between the CME and BTC. So if we look at BTC and we look at the CME, it was, let me just change this real quick. So a little bit more aggression by the CME initially, or just one-sidedness and absorption on the CME versus Binance and Coinbase. All right, guys, have a fantastic evening, rest of your night, whatever, and